Okay, we just witnessed one of the most insane years for the stock market. So now let's break down what that actually means for your money heading into 2026. A $9 trillion stock surge in 2025, but Trump's tariffs could flip everything in 2026. Yeah, that's the headline. And it sets up a huge, massive question for all of us as we head into the new year. I mean, just look at that number, $9 trillion. That's how much new wealth was created just in the US stock market. It's kind of hard to even wrap your head around a number that big, right? Especially when, for so many of us, the biggest financial worry was just making rent. So, that brings us to the real question, the one that actually matters. Is your portfolio ready for what comes next? Because here's the kicker. The very things that cause this massive boom could be the same things that trigger the next big shakeup. Stick with me because by the end of this, you are going to have a clear, simple game plan to handle all of it. All right, let's talk about the big one, the $9 trillion FOMO. You know, that fear of missing out. Because for so many of us, especially millennials, 2025 felt exactly like that. Like there was this huge, amazing party happening, and we were stuck on the outside just looking in. And this chart, it shows you exactly why it felt that way. On one hand, you had the S&P 500 just blasting off, up 17%. And on the other hand, the cash you've got stashed away in a savings account, it barely budged, maybe grew less than 2%. That huge gap you see, well, that's literally where wealth is either made or totally missed out on. But hey, it's not like you can just snap your fingers and jump into the market, right? Not when our generation is staring down this monster of a number, $1.7 trillion. That's the student debt wall. And man, it is a serious headwind that makes it so much harder to even think about investing. Okay, so this chart right here pretty much sums up the millennial budget squeeze. Think about it. Half your money, gone to housing. Another huge 30% chunk eaten up by student debt. What's left over? That tiny little 20% slice for everything else. Food, fun, and oh yeah, investing. When you see it like this, that 17% market game starts to feel like it's happening on another planet. Okay, so let's dig in and unpack what was really going on, what actually fueled this insane 2025 boom. Because trust me, the story is way more interesting than just stocks went up. I mean, the numbers were just wild. You've got the S&P 500 notching its third double-digit year in a row. Then the Nasdaq, just supercharged by the whole AI craze, shot up 21%. Even the Dow was on an 8-month winning streak. This right here, this is the engine that created that $9 trillion of new money. But, and this is the part most people miss, here's where it gets really interesting. This whole boom didn't happen in a vacuum. And the reasons why? Well, they are definitely not what you'd think. So check out how this whole thing played out. At the start of 2025, everyone was freaking out about tariffs, thinking the market was going to tank. But then, the complete opposite happened. China pumped a bunch of stimulus money into their economy, which gave a surprise boost to stocks all over the world. Right at the same time, the AI arms race went into overdrive, sending tech giants to the moon. And the craziest part? By the end of the year, even markets outside the US were having their best run since 2009. The very thing that was supposed to be the big threat, geopolitics, ended up being the fuel for the fire. Wild, right? But here's the thing. That same engine that powered the boom is now the biggest wild card for 2026. Which brings us to the tariff twist. Get ready because the game is absolutely about to change. Just look at this potential power shift. 2025's undisputed champion? U.S. stocks. They blew past all the Sell America warnings. But the wild card for 2026, it could be emerging markets. See, if all this tariff talk actually becomes real, we could see a huge shift, with money starting to flow away from Wall Street and into other places, like China. So, what do you do? How are you supposed to build wealth when the rules of the game could literally change overnight? How do you play when the whole field is tilting? That is the question we have to answer right now. Okay, this is what you've been waiting for, your 2026 smart money game plan. We're cutting through all the jargon, all the nonsense. I'm going to give you 4 simple, powerful steps you can take to get control of your money, even if you're working with a totally normal salary. All right, here it is, your 4-step playbook. 1. Review and reallocate. We're building a portfolio that's tough, that's resilient. 2. Max out your Roth IRA. This is about playing the long game, completely tax-free. 3. harvest your losses. We're going to turn market dips into tax wins. And 4, monitor the headlines. Stay sharp and agile with one super simple rule.
Let's break down step 1, reallocation. Look, a 2026 portfolio has to be ready for anything. A good place to start is having 60% as your solid core, something like a low-cost S&P 500 ETF. But, and this is so important, you need about 20% in international funds. That's your hedge in case the US market takes a hit. Then, maybe 10% in bonds for some stability like an anchor. And if you've got the stomach for it, maybe 10% in something higher risk like crypto. It's all about balance, so you're not putting all your eggs in one basket.
Step 2 is a no-brainer. Max out your Roth IRA. The contribution limit for 2026 is $7,000. I want you to really let this sink in. Every single dollar you put in here grows 100% tax-free for retirement. It is without a doubt one of the most powerful wealth-building tools you will ever have, period. All right, step 3. This is a pro-level move that sounds way more confusing than it actually is. It's called tax loss harvesting. Let's make it super simple. Say you made $1,000 on one investment. Awesome. But another one you own is down $1,000. What you can do is sell the one that's down to harvest that loss. Now, that $1,000 loss basically cancels out the taxes you would have paid on your $1,000 gain. It's like turning a lemon into lemonade. A temporary dip in the market becomes a permanent win on your taxes. And last but not least, step 4. This is your secret weapon for staying agile and not letting your emotions take over. We're calling it the 10% tariff rule. It's simple. If you start seeing serious headlines that widespread tariffs are hitting 10% or more, that's your trigger. It's not a signal to panic and sell everything. It's just a calm, disciplined reminder to think about trimming your U.S. stock holdings by maybe 5 or 10%. The key is having a plan before the crazy news hits. So let's bring it all home. What are the big takeaways here? First, that $9 trillion boom was very real, but it was driven by some really complex stuff. Second, geopolitics, especially those tariffs, are the #1 wild card for 2026. Third, your best defense against all the craziness is a smart, diversified portfolio. And maybe the most important point of all, you absolutely do not need a massive salary to make the kind of strategic moves that build real, lasting wealth. And that's really the bottom line, isn't it? In 2026, the smartest money isn't going to be chasing the trends from last year. It won't just follow the boom. It's going to be ready for this shift. Okay, and just a quick, important disclaimer here. Everything we've talked about is for educational purposes only. Investing always comes with risk, and what happened in the past is never a guarantee of what will happen in the future. Honestly, the smartest move you can make is to chat with a qualified financial advisor who can help you figure out a plan that's perfect for you.